We're really excited today. We're talking about financial wealth. This is a topic that everyone needs to tune in to and listen to. Just before we went live, Cheryl and I got to do some behind the scene chatting, and already I am fueled with information. So, this chat is really going to give you unlock some information and insight that will help you to really change the trajectory of your finances so that you can have the life that you deserve to live and be able to live in financial freedom. So we want you to do us a favor and share this message out to your colleagues, your networks, your families, your friends. Help us to get out these messages because we believe in empowering and uplifting our children, our parents, and our families. And if you are watching us on YouTube, or if you haven't done so already, don't forget to subscribe to our YouTube channel at iRace Inc. And of course, don't forget to subscribe to our ATL Rise podcast. Every Friday, new episodes are released on all major platforms. Cheryl is in the building virtually.
I'm excited. I'm excited.
Yes. I'm excited. Thank you so much for being with me, Cheryl, and for the wisdom and your expertise that you'll be sharing with us all in just a few moments. So I'm going to start off by reading your bio, and then afterwards we can jump into some of our questions. Sounds good?
Perfect.
All right. Cheryl Lo Russo is a financial advisor and life insurance licensing instructor working in New York who has years of financial industry experience. She is a life insured licensed and also works for the PF's Investment Incorporated. And her career trajectory has included roles as PF's Investment Incorporated, Primerica Financial Services, Utility Programs, and Metering and National Benefit Life, which she'll explain some of those things to us. She also has financial services by FINRA, FINRA, Series 6, 63, 65, and 26. And I'm sure you'll explain that to us as well. And it qualifies her as both a securities agent and an investment advisor representative, where she's able to advise clients in the state of New York. So if you are looking for a financial advisor, you have literally just found one. Again, Cheryl, thank you for being here.
Thank you so much, Miss Moore. So I appreciate that introduction. So I'm so excited to, just share some information with you now. I guess you had some stuff you wanted to bring up.
Yeah, I know you have so much resources for us, and the great thing is, Cheryl's going to be sharing a link for those that are watching to be able to click on to gain some additional tools and resources that you can utilize to help you after this conversation. So I think just starting off, Cheryl, what are some I guess what is financial health? Because I think that's important to lay like that the groundwork. What does financial health look like for those that may not understand it?
Well, financial wellness means basically taking control of your finances. In general, most people, what do most people, in fact, if you look at the, unfortunately, the divorce rates in the country, most people, it has to do with money. So money pretty much controls our whole life. And most of the time, we have no control over our finances. So, for example, how much you're earning or whatever money you are earning, you are making, whatever it is, that pretty much decides everything: where you're going to live, what kind of car you're going to drive, where you're going to go eat, what kind of foods you're going to buy. So we got to realize that money is the central part. As much as we say, oh, it's not only about money, but the last time I checked, I can't go into when rent man comes due, he wants his money. So we need to have a way of taking control of our finances. And that's where, the lack of education really falls short, and how we end up struggling as we kind of progress and we get into adulthood. So that's one of the issues, is the lack of education, especially in school. I mean, we just don't learn this information. And that's why, as we do, because at the end of the day, we're all going to grow up, we're all going to be working, we're all going to be making money at some point.
Mhm.
Shouldn't we learn this? Like, this should be a basic, like brushing your teeth, I believe. It
Yeah,
should be a basic
absolutely.
knowledge, but unfortunately, it isn't.
And there's a reason why, right? Sure, when we think about, because not every education institution um, is not teaching kids this. There are institutions that may be private or in other neighborhoods where they are teaching students about financial health and financial wealth. But unfortunately, I truly believe, and in my experience, what I've seen, not just as someone that runs an agency that works in tandem with public schools, but as a person that has grown up in a public school system, I have never learned any of this information. And it wasn't until I went to college and I had that exit interview about my student loans, I was like, this is real, right? And so, we don't get this information, unfortunately, and a lot of our education growing up. And the other part is, I think this information is held very intentionally and strategically from communities of color to prevent financial health and wealth. But thankfully, we have people like you, Cheryl, that are advising people and that are helping people to really transform their lives. Because, like you said, when it comes to finances, it really does control everything. It determines your health insurance, unfortunately, in some places. It determines where you live. It determines your health outcomes. Because if you don't have enough to move out of certain neighborhoods, your life expectancy actually reduces and decreases. And so it really does determine your quality of life, your credit report, what you qualify for, whether it's a car or a house. Everything is really tied into finances. And so, when you made the statement that these are things that should be basic, like brushing your teeth, I agree. But there is a very structural reason why it's not so basic.
Yeah, absolutely. And the thing is, I mean, money is a tool of control. So if you can pretty much control people with money. So if you have a way of controlling people and people don't know how to use that tool to get it working for them instead of working against them, well, then it's easy to control people. And that's the issue, is that, again, it all goes back to, if you know how to manage your finances, you're going to be in control instead of out of control. And that's really a lot of the things that we teach, is the financial concepts, because we know that, credit cards, like you mentioned, debt, that is a cancer that's eating society. Okay. Like you mentioned, student loans. Okay. How can we really get ahead or get on top if we're constantly paying debt?
Yes.
And the thing is this, what is debt really? Obviously, you owe somebody, but not only do you owe what you borrowed or whatever it is, but then you have all that interest. And that's just eating at our ability to save. So the goal would be to get out of debt quicker and faster. And how can you do that? Because at the end of the day, does the credit card company want you out of debt or in debt?
Mm,
Of course, they want you in debt, because aren't they making money on all that interest?
that's so good.
So that's the key. The key is, you got to basically get the rules in your favor and get your money working for you. Listen, we all work hard for money, but
Yeah.
is our money working hard for us?
Hmm, that's so good. As our money working hard for us. Shout out to Colette Anderson on her comment about Connecticut passing a law that all high school students must have a class on finances. We'll love to see this in New York. We'll love to see this really nationally in every state. I think it's so essential, again, and core to and fundamental to our kids' success educationally and in terms of life outcomes. And shout out to Priscilla Prince also on watching with us. But Cheryl, absolutely, you talked about our money working for us, but that may be so foreign to so many people. What does it look like for our money to work for us?
Well, I'll give you an example. Sometimes when, sit down with a person and I ask them, hey, How are you doing with savings? Generally speaking, it's recommended to have an emergency fund. Now, we can all agree, most people tend to live paycheck to paycheck. And
Yes.
what happens when an emergency arises? Like we all saw during COVID, people lost their jobs. Okay. What happens is that we don't have money to fall back on. And what do we do to fund our bills, our lifestyle? We end up going into debt. So the idea is you want to be able to have an emergency fund in case, yes, it is recommended to have at least 3 to 6 months of living expenses set aside in
Hmm.
case of those emergencies. Listen, you have a house, something breaks down in your house. You have a car, your car breaks down. You got to pay for the repair, or maybe your child gets sick, or maybe you're disabled, you're out of work for a few months. You need some money to fall back on. So that is the basis, obviously, is to at least have some, money to fall back on, having that emergency fund. So
Yeah.
at least, or as you say, some people call it a rainy day fund.
Right.
Okay. So, and the other thing is, a lot of times we talk about saving. Most people tend to save where? Either under the mattress, right? That's a good one, or maybe in the bank.
Right.
Now, okay, that's fine. Okay, your money is there. But here's the challenge with that. Now,
Hmm.
we all see prices. Prices go up, okay? If
Right.
I stuck $20 under the mattress 10 years ago and I go lift my mattress today, there's still $20 there, okay? It didn't grow any, but is my $20 going to go as far as it did 10 years ago?
Mm.
And we know the answer to that is definitely a big no. The
Right.
same thing, if your money is getting saved, if you're saving money in the bank, for example, what is your money earning on the bank in interest in your savings account?
Hmm.
Don't laugh at me. I know I'm asking a question, but it's less than 1%.
Yeah. Typically.
Okay. So now, if let's talk about rising costs. Okay. If inflation, now on the norm, we all know we're not in the norm at the moment. Okay. But on the norm, inflation is usually about 3%.
Mm-hmm.
So if your money is making 3%, okay, but inflation just attacked it at 3, you're basically at a zero, right?
Mm-hmm.
Because the goal is you have to beat out inflation, because we know our money is not going to be worth the same as it is before.
Hey.
So that's one of the challenges we really face, is just the rising cost of things. Like you mentioned, obviously everything's going up: housing, gas prices, food, everything.
Absolutely. Absolutely, Cheryl. This is really rich information. I'm learning so much listening to you. You talked about beating out inflation, and that percentage of 3% on average, which I know it's been a lot more than that over the last 3 years since COVID. Um, so I'm wondering some alternatives to where would you recommend people save their money if not in the bank or under the mattress? What are some places, or what would you recommend where we save our money?
Well, there's obviously, as being, licensed, in the industry, obviously we always have to look at a track record, okay?
Hmm.
Because the idea is this. The idea is we're not putting our money in and then 3 months later, oh, it magically quadrupled. But if you can look at a systematic way of investing, which is a discipline, you
Okay.
can average in something like called a mutual fund. Okay.
Hmm.
Mutual fund, basically it's a compilation of, many different companies in one investment. And, what happens is when you invest in a mutual fund, basically the average mutual fund, like I said, has 100 plus different companies. So
Hmm.
by investing in that mutual fund, you're basically buying a little piece of each of those companies. So let's say your daily products, right? Your hair care products, maybe Johnson and Johnson. Maybe you shop at Walmart. Okay, all of those companies, you're actually buying a little piece of those companies. Now, if you've looked at over the long term, and if you look at the the Standard and Poor's, which is the S&P 500, if you're looking at over the long term, the market has averaged about 10%. Okay, now Yes, it depends on what fund you're invested in, and no, it is not guaranteed. However, if you are looking at the long term with the ups and the downs,
Hmm.
that is what a long-term investment can look like for somebody. You can average higher interest rates to at least beat out inflation or hedge against inflation.
And that's for what's, and you can, the long term, can you give us the duration or a sample of what that looks like?
Yeah, I mean, if you're looking at like, listen, I don't know how long, how many more years you have for retirement, but let's just say you're going to retire in, let's just say 20 years as an example. Okay, so you have a pretty long time frame.
Hmm.
Now, your goal for that investment would be you want to get as much growth as possible. Now, somebody that's maybe 5 years off of retirement, their growth opportunity would be a little bit less only because of their time horizon.
Right.
That's key when we're talking about, I'm not going to put my grandma I'm not going to put grandma in Bitcoin, let's just say, okay? Grandma is, she very frugal, okay?
Right.
Grandma cannot afford to lose her money in Bitcoin, okay? So
Right.
grandma might just stay, very under the mattress, so to speak. But so there's a question in the chat. I don't know if you want to ask those or no.
Yeah, we'll get to those questions in just a moment. Are there any taxes applied with? Yeah, I think that's it. Yeah, I mean, I think that's a fair and a good question that others may want to hear too. Are there any taxes applied with mutual funds?
Sure. So essentially, when it comes to accounts, generically speaking, there's two types of accounts. You have one that's called non-qualified, okay, and one that's called qualified. Qualified, excuse me, basically means you have special tax treatment tied to it, okay? Now, I have a little rule of thumb for everybody, and you guys are going to love this. The little rule of thumb with the IRS goes something like this. If you have interest, the government is interested, right? Means
Ah,
they want a piece of the action, right? When you work, you earn, okay? Don't you have to pay taxes on your earnings?
mhm.
If you have an investment, and you put in 10,000 and it grows to 15,000, guess what? You had a $5,000 growth, which means yes, you have to pay taxes, okay? So if the account is non-qualified, it's basically pretty much you pay taxes on whatever was above what you paid because you had interest. The government doesn't tax losses. Like if you show a loss, they don't tax losses, they always tax gains or interest.
Hmm.
Okay. Now, a qualified account, qualified means it gets special tax treatment. So you guys probably have a 401k or a 403b or some type of retirement plan. Guess what? That is called qualified because you get a special tax benefit. What is the tax benefit in that particular account? It's tax deferred. Now, tax deferred means you will pay taxes later. Okay. So the benefit of that is you're kind of delaying the government. You're saying, I'm not going to pay you taxes this year. I'm not going to pay you next year. Specifically in a 401k, let's say you retire, you're 62 years old, you want to call it a day, call it a career, and you start to take the money. Now you'll pay taxes at that time. So you
Mhm.
basically put the government off for all those years. So your money was growing, right? Because it was invested. And even in your 401k, where is it invested in? It pretty much is invested in a mutual fund. Okay. So, but the main difference is what is the vehicle? Is it a qualified, which has special tax treatment, or non qualified, which is just basic? It doesn't have any special tax benefits. So, the advantage of deferring your taxes is typically when people retire, their income will typically go down. So, they will pay taxes in that tax bracket. This is not tax advice. I'm not a tax advisor, by the way.
That's
Just
great.
basics, just the basics of it. Okay. Always speak to your tax professional.
Yes, that's really great. Thank you for that question. And thank you for that very thorough response about the two types of accounts, non qualified and qualified accounts. Being if you have, for example, 401k and you get a special tax benefit, This allows you to have a defer your taxes, to pay your taxes later, put the government off later, um, in order to continue accruing. And then when you're ready to pull out, once you've finished, once that account is ready to close or mature, then you would pay those taxes out. Did I get that correct?
You got it. And there's also one more thing that I did not mention, but there's also IRAs, which stands for Individual Retirement Account. So there's two types of IRAs. You have a Roth IRA and you have a traditional IRA. Now these two accounts you can do personally. It's not tied to a job. So a lot of times people, jump from job to job. They may have benefits at the job. They may not have benefits. These IRAs are individual and they're personal, so it has no bearing on your company plan. So, and now more specifically, anybody that is working has earned income, Roth IRA. Pretty much most of the population qualifies for a Roth IRA, and this is the unique benefit about that account. That money that is accumulating over time, a Roth IRA, as long as your account's been open for 5 years and you're 59 and a half, that money is tax free. So imagine you've accumulated 100,000 in a Roth IRA and 100,000 in a 401k. Now the 100,000 in the 401k is going to be less because you're going to pay taxes. Okay. Remember we said it was tax deferred. So you're going to pay taxes when you take the money out. This Roth IRA is tax free because basically you've paid the taxes up front. Okay. So it's like you work, you earn, you get taxed, you get your paycheck, and then you put into the Roth IRA. So you've paid it up front. So all that year, that money is growing, and you will not pay taxes when you're ready for retirement. So that's something that a huge benefit that you got to take advantage of.
That's amazing. Thank you for that. And I'm actually recently just opened one, so I'm listening to you, and I'll have a question after this. I won't ask it online.
Yeah, no problem.
But this is really, really, really helpful, especially asked about rollovers when you're rolling over retirement, but I'll ask that separately. And so wondering what are some different types of ways people can invest their money? If you can sort of break that down. People may be saying, I'm living from paycheck to paycheck. I can't afford to save. How can people save and invest their money so that they can experience financial freedom?
That's a good question. The thing is, a lot of times people believe, oh, I don't make that much money, or, oh, you need to have a lot of money to start. Not true. You can start out with like $50 a month, as an example. Okay. It all goes back to the mindset. It's all a discipline. Now, let me ask you guys, every month you got to pay your cell phone bill, you pay your cable bill, you pay your rent. Now, back to the example of the rent, when the first comes around and Mr. Rentman comes around and he says, hey, the rent is due. You can't have any excuses for Rentman, okay? So I want you guys to switch your thought process and put your name on a bill. Let's just say the Miss Shaniqua Moore bill. What if you put that bill and Miss Shaniqua Moore says, hey, every month, now listen, like we said, you can start out small, but the goal would be to save 10% of your income. I know that might be a lot, but start out small, because by getting into the discipline of starting out small, guess what? Maybe you get a raise, or you made some overtime. You know what? You can increase that savings. It's all about making it a priority. So back to that, hey, you have a bill, you know that every month your cell phone bill is $100. Well, put the Miss Shaniqua Moore bill, that's another $100. Well, you know what? When that money, this is what I've found out, just, over experience. What I found out is that if I gave somebody $100 bill in the morning, by the end of the day, that bill would be broken and there would probably maybe only be $20 left. Okay. But now, what if that same $100, I didn't stick it in their pocket, but I automatically drafted it and I put it into, let's say, an IRA or an investment account. Now, did that money cross their hands?
Mm-mm.
That money didn't cross their hands. They didn't have a chance to burn a hole in their pocket. So they just set it on auto pay. Just like you have a lot of people pay their bills on auto pay. And you don't even think twice. You're like, oh, the 15th. All right, I know my car insurance bill's coming out. Oh, this bill's
Mm-hmm.
coming out. So you want to set it and forget it. So that is called pay yourself first. And that's one of the things we tend to do. We're always paying everybody else, but what about the bill with our name on it? We have goals and dreams too, but we're not prioritizing it.
So that pay yourself first. Put your name on a bill and put that into your savings. And that is a great way to start. You can start somewhere. It doesn't matter what you make, how much income you have. You qualify to save. You can still save. So that is so amazing. I'm wondering, we're literally wrapping up on time. Oh my goodness, but this is so good. This is really good. I didn't get through all my questions. I wanted to ask about home ownership and insurance and ways that you can use that to also unlock financial freedom. But I know we didn't get into that. So maybe just resources you can provide, and maybe just touching on the insurance piece, the essential, why that's important. And I think ways that we can use that also, based on the type of insurance we have, to um, either invest or to use it as a way to also um, change our financial trajectory.
Yeah, well, insurance, as we know, insurance is just for protection only,
Mhm,
pure protection. It's just like any other type of insurance, like your car insurance. I
mhm,
don't like to pay my car insurance, but in case I get into a car accident and I make a claim, they pay out the claim.
mhm,
So the same way we buy our other insurance, we should buy our, when we talk about life insurance and leaving money to a family. How many times have we been at, let's say, a funeral? And what is the first question people ask? Did they have life insurance?
yeah.
Or have you ever seen people on GoFundMe? There's no money for a funeral. They're on GoFundMe trying to raise money. So when it comes to life insurance is one of those things, a lot of people they either don't want to talk about it or they don't understand how it works. Back to that not understanding. But the idea is it should be income protection, not just, oh, okay, you can just throw me in the ground. My funeral's paid for. That's it. That's enough.
Mhm,
But here's the question. If you were bringing in 50, $60,000 to your family and now you're gone, doesn't that 50, 60,000 also gone too? What happens to your spouse, your kids? We need to keep that money coming in. And that is where income protection comes in with obviously life insurance. And when it comes to term insurance, you're going to get the most amount of protection for the lowest cost.
mhm,
One of the things with the insurance industry, unfortunately, a lot of times people are getting sold insurances where they're super expensive. So therefore, people have not enough coverage. In other words, they're underinsured. They might need a $500,000 of life insurance, but they only have 50,000 because that's all they can afford. So in a
mhm,
policy that's considered to be a whole life, a permanent,
mhm,
any type of policy that has cash value is going to be pretty much very expensive, where they could have gotten probably 6, 7, 8 times more coverage in a term insurance. So the idea is you want to buy the most amount of coverage when you have the most responsibility. So for example,
mhm,
when you have a lot of responsibilities, like you're young, your kids
mhm.
are young, you have young children that are depending on you.
Right.
Maybe you got a mortgage, you got high debt, whatever the case may be. Here, you're still kind of young. You haven't really built up your savings yet. Okay. It's
Mhm,
called the theory of decreasing responsibility. But what happens over time, fast forward? Your responsibilities are going to go down. Your 5 year old is now 30, out of the house, no longer your responsibility. Okay. What you need is your responsibilities go down. But what do you need here? You need to have money for retirement. Okay.
mhm,
So the goal is to protect against those two things. You buy the most amount of life insurance when you need it, while at the same time is building up that retirement. Okay? Because we either, God forbid, we become an angel too soon, or what's the other thing that can happen? We live too long. Okay? And we want to make sure we have money. We don't want to go broke. Okay. So those are the two things that we want to protect against.
Thank you so much for that information. That is so rich, and I know there's a lot of wheels turning right now, and people probably need to do a little more research. But you being a financial advisor, do you mind sharing ways that people can find you, reach out to you, connect with you, maybe through some questions, or maybe interested in some financial advising?
Oh, yes. So I think she posted on the screen the real How Money Works. Everybody can see that link, well, website, right? So a lot of the concepts that I just started to touch on here are in that resource. Is actually a digital copy of this. Basically, it's an A to Z guide on the money, managing your money, how money works. Okay, but also you can reach me if you want to put up my. I think you put up the email address, or you want me to type that in.
Oh no, they'll.
Oh, there you go. Okay, so you can reach me at that, which is just my first and last name. It's Cheryl Lo Russo at gmail.com, or that's my contact. That's my direct contact. So, just reach out to me. I'm available. We can always set up a Zoom to kind of, give you more information, because I know there's probably a lot of wheels turning in your brain, questions going on. And, that's obviously some people may not feel comfortable asking in a public forum. So we can always do that more on an offline basis. And yeah.
Thank you so much, Cheryl. You are such a gem, and you're full of so much information. You're just an asset to our community and to the state of New York. So thank you so much for your expertise, for all that you have provided to our listeners and our audience today. Please reach out to Cheryl if you have questions, if you are interested in her services, or just to download that resource. I would do it if I were you. I'm gonna actually do it. Um, so there is hope. And remember that you can start somewhere wherever you are. You don't need to be a millionaire to save. You can save with what you have. So this is very important, especially for parents. Back to school, please avoid the gouging of pricing. I've been seeing it a lot. Report it if you see it. You can report price gouging if you see it happening, and try to avoid overspending for back to school. Look to see what your child actually does have in the home before you just go out and start spending a whole bunch of things. And just we want to make sure you're financially healthy and well. We want to make sure you're empowered and you're living a life of financial freedom. So if this message was helpful for you, we want you to share it out, comment below, and let us know. Give us some feedback. We appreciate all of you for tuning in today. Tomorrow, we will be releasing another one of our ATL Rise podcast episodes. We'll be talking about burnout, stress, and leadership. And you want to listen to this episode because it is absolutely dynamic. So go ahead and subscribe if you have not yet on all major platforms, podcast platforms, Spotify, Apple Podcasts, iHeartRadio, wherever you choose to listen. We appreciate you all again. Thank you so much again, Cheryl, for being with us.
Thank you so much for the opportunity, and I'm glad that I got to share some information with you. I hope it was helpful for you guys, and I'll look forward to speaking with you again soon. Okay, so thank you so much, Miss Moore. I appreciate this.
Thank you, Cheryl. Thank you all again for
Bye,
listening.
everyone.
Bye, everyone. Stay tuned. We'll see you again.